Welcome to Financial Clarity, the podcast dedicated to helping service-based small business owners achieve financial success. Join us as we demystify financial concepts, get practical tips from seasoned entrepreneurs, and discover strategies to increase profit and value. Candace Malinsky here. I'm the host of the Financial Clarity podcast, where I connect successful entrepreneurs, financial experts, and leaders in the small business community. Today, we have a special guest to help us demystify the world of bank financing. This is a topic that comes up so much for our CFO clients, but it's also something that we get a lot of questions about in our YouTube community as well. So we wanted to bring on a true expert today to help us understand bank loans, lines of credit, and anything we need to know if we want to walk into a bank and get some funding for our businesses. Before we get into it, I have a message from today's sponsor, my company, Clara CFO Group. Clara CFO is dedicated to providing financial clarity and profit maximizing solutions to small businesses through fractional CFO services. The team at Clara CFO are seasoned accounting professionals with a heart for small business. Whether you're grappling with hiring decisions, profit margin concerns, or you have ambitious growth plans, Clara CFO provides insights, recommendations, and a clear financial roadmap to achieve your goals. To learn more about Clara CFO Group and how we can help your business, visit claracfo.com. So today's guest, we were actually introduced because I bank with KeyBank, and that's where I met our guest, Maxx Mogollon. So I'm really excited to have you here today. She was one of the business bankers that I worked with for one of our clients, and she helped in securing a line of credit for one of our clients. So a little bit about Maxx. So Maxx Mogollon likes to refer to herself as a banker by choice, but an accountant by trade. She's a mom, wife, grandma, and business advocate. Her passion is to partner with business owners to help them be successful in their endeavors. Through her position as a business banker and a Key for Women co-chair, she is able to empower and advocate for business owners in the community. Maxx, thank you so much for being here.
Good morning. Thank you for having me.
Yeah, thank you for saying yes. I actually was a little intimidated to ask if you would come on to a podcast or if somebody from KeyBank would come on, because I don't know how banks work and if they do this kind of thing. I've never heard a banker on a podcast before.
Well, and me either. So it's a first time for me. I wasn't even sure if we did it. So it's good to know that we can and have a platform to kind of educate and talk about all these things.
Yes, I'm excited because I was really happy that you guys are in that space of like, hey, we're here to educate as well. And because I feel like banking in particular tends to be this thing that people get really intimidated about. And it feels maybe inaccessible, or it feels like they're speaking a different language, or whatever it might be that is intimidating to small business owners and people in general. But I want to say, like, let's have a conversation here. We're going to break it down. We're going to demystify some things.
Yeah, let's talk about it. Yeah, let's get it out there and make it accessible.
Yes, absolutely. I love that. Because not only for small business owners, funding can be like a make or break it kind of thing in their businesses, but especially for female business owners and minority business owners, they have less access to some traditional capital than what other business owners might have. So being able to walk confidently into a bank and know what you need and to be really clear and have your stuff in order can kind of make a difference there. So yeah, I'm excited. Okay, well, before we kind of get into all of the banking things, I'd like to hear a little bit about you and your story and how you came to be working for a bank and helping businesses.
Yeah. So I've been in banking about 21 years. So for me, it was, when I was younger, I had two kiddos and, working two jobs. And I started as a part-time teller in banking and wasn't really sure that that was kind of where I was going to be kind of long term. But it's turned into a very long, successful career, which, I never really thought about. But part-time teller kind of worked my way up. And when I was growing up, my aunt, she was a state auditor. And so I remembered going with her and seeing, accounting and she was always crunching numbers. And so that was always something in the back of my mind. And so, I did banking for a good probably five to 10 years and went back to school. And I was, okay, I'm going to do the accounting thing. And kind of for me, it just felt like more of a career. And so I went back and did accounting and got my degree. And I really missed banking.
Mm,
I ran a couple of small businesses and absolutely loved it. But I really missed the banking side, the relationships with my clients and, getting to know the kids and the family and really kind of partnering and stuff like that. And I got back into banking and then I realized that both of those worlds could merge.
mm.
I could combine the accounting with the banking and with business banking, and the rest is kind of history. So it's been really great. It helps give me a dual perspective. I understand why things are done the way that they are on the accounting side. And then I can come in and educate and help and guide on the banking side as well.
That's awesome. And then did you say you also ran a few small businesses?
I did,
Yeah,
yeah,
okay.
in my accounting days, yeah.
Oh, that's amazing. Well, and then that gives you even another perspective of like what are small businesses running into regularly. So that's amazing that you have that background. What do you think is like what are you hearing from businesses as they come to you and they're, maybe starting their banking relationships for the first time? Like, are they typically coming for checking accounts or are they coming because they're like, "Oh, we need a loan?" Like, where do you see people usually kind of starting?
Well, I mean, a lot of it obviously is they don't necessarily they need the checking. They know, right, from a business perspective, you start a business, you need your checking account. Um, and and from there, it's almost like they're not sure what else kind of goes with that.
Yes.
And so, which is why I'm really excited we're having this conversation because, if they're starting up a business, you want to ensure that you have that best foundation possible for that first year to really kind of get everything up and running. And so, having a relationship or being able to have a conversation with your banker and kind of know what's available. I see a lot of, checking and startup loans. That's a really big one. Really getting that working capital. Or even as of lately, we've seen a lot of business acquisition. So expanding their brand, buying an already successful business. So those have been just kind of what I see as of lately.
That's great. Uh Sorry, here I had to close something. um that makes sense. I think that idea that people don't know what they don't know is a big part of both accounting and banking
Yeah.
because and I'm really surprised sometimes because I have conversations. I mean, we provide CFO services for clients, and clients are typically over $1 million in annual revenue when they come to work with us. And so these are business owners that are not newbies. These are sophisticated business owners. They, have run very successful businesses. They've hired people. They've figured out how to get their businesses to these sizes. And then I'm surprised at the conversations that I have sometimes, like educating somebody on, the fact that a line of credit, exists and that it can help you when you're, maybe waiting for a large invoice to come in and you still need to run payroll and you don't need to freak out. Like we can figure this out. That's an instrument and a tool that we can have for our businesses. So I think that it's good to that we just talk about kind of what types of things we can use our banks for. So I
Yeah.
was wondering if maybe you could run us through um, what because yes, checking and savings accounts, we all know that banks do that, right? Like
Right.
we
Yeah.
we have
Yeah.
that. But maybe you could tell us a little bit and I also want to preface this to say like we're not trying to like this is just banking in general. Every bank is going to have potentially some specific products that might be a little bit different. You can talk to your bank about that, but we're trying to keep this pretty general. And we have no affiliate relationship with KeyBank whatsoever. I bank with KeyBank, but that's because I like them and I think they're great. But we don't have any kind of referral relationship or anything like that. So I think it's really important that we say that. Um, but maybe we can talk about like what we might go to the bank for if we're looking for some financing or we're looking for maybe a little bit of flexibility where we need maybe a bit of extra cash in our business that's not coming in because of the operations. Maybe tell us a little bit about some high level categories, things we might
Yeah.
hear.
Yeah. So obviously, as we all know, there's many different reasons. It depends on the stage and kind of where you're at in your business, right? So some of the categories would be if you're starting the business from the ground up, okay, I have a plan, I have a vision. Now what? Starting the business or expanding your business. Like you're saying, existing business owners, they're, a million in revenue. Okay, maybe it's time to grow to that next level. Paying off debt, consolidating any existing debt. I know sometimes, we can acquire a lot of things and you end up paying a lot more on interest. So it might be better to consolidate that to have interest on one loan instead of five.
Right.
Then to, like I mentioned, acquisition. If you find another business in the area that's doing what you do, acquiring that business and adding that to your brand. Marketing campaigns, growth, those are big ones, or just to have as almost like insurance to have, cover unexpected expenses. As we all know, especially in today's day and age, things change every day, things are always happening. And so it's always nice to kind of have that peace of mind that you have something there and available for you if anything does happen, if a truck breaks down or if, a machine breaks or anything like that. It's always nice to know, like, oh, I have this line of credit I can pull from. I won't lose any business. So those are some of the kind of main categories that would be the main reasons to need lending.
Hmm. That makes sense. And I always like to tell people it's good to have something set up before you need it.
Proactive instead of reactive. Yeah.
Yes, yes. I think that having something like a line of credit in your pocket is that kind of insurance that you can have against, maybe running into a cash flow concern or, like you said, something you need to repair something. You need to maybe make an investment that you need to make a quick decision on, and you can't wait for, maybe an approval process on a loan, something like that.
Or there would even be your accounts receivable if there's a delay in receiving that, right? So kind
Yes.
of that cushion to get through.
Yes, absolutely. Maybe you could explain to us the difference between maybe a traditional term loan, something like a bank loan, just getting, quote unquote, a bank loan. I know there's lots of different types of loans underneath that, but maybe you could just give us a high level of what is a term loan versus a line of credit.
Yeah. So a term loan is going to be basically you get the entire amount of it upfront. So if you get a term loan for $150,000 at the time of closing, that 150,000 is paid out to you. Usually those are best for equipment, vehicles, if you've got large purchase that right then and there.
Hmm.
And you're going to pay on that every month, whatever the rate is, that's just going to sit. A line of credit is revolving. So that's like we talk about having the insurance in your pocket. So you have, $100,000 line of credit. You have it just kind of sitting there, say, this week we're a little tight for payroll. You pull 50,000, you keep everything moving efficiently. You get payroll done. And then the next week, everything comes in and you pay it back down. And then you do that all over again. You pull from it, you pay it off. You pull from it, you pay it off. So that's where a line of credit and a term loan are very different. Just depends on what the need is.
Gotcha. What do you see businesses opting for more often?
Um, I see a lot of line of credit just because it's good to have that peace of mind. But I sometimes they'll do both.
Mhm.
If in this year, you're planning ahead and say, you're going to need to buy some large pieces of equipment. We'll do a term loan and pay those and get that equipment purchased. And then we'll have a line of credit in place for little stuff. It's okay to have both too.
That's a good point because I think that's what I see with clients as well is that there's different needs. Like there's different scenarios that might necessitate a loan, like a traditional loan versus a line of credit. And you might have both of those scenarios happening at the same time.
Yeah.
Or, you might have your big equipment purchase that you're working on, or we actually just had a client buy a very large like industrial truck to do installations. And so that truck needed to be financed through a loan, but they still have payroll. They still have accounts receivable. They still have sometimes outstanding invoices that may not get paid on time. So having that line of credit, then they have, both. And, I think one thing that maybe sometimes scares business owners from signing up for something like this or even exploring the option is this feeling that debt is bad. Do you
Mm,
do you hear that often?
I do. Yeah. I mean, it's understandable, right?
Mhm.
And I think we're kind of raised to kind of think that almost on a personal level. You think of credit card debt is bad,
Right.
or you automatically think of that. But I think if we look at, like, with a line of credit, what's it worth to you to have that peace of mind?
Yes.
And it's not that the debt is bad. You're utilizing it for sustainable growth of your business. So the long-term return on investment is worth it, right? So I think really kind of changing that mentality and looking at it as a tool to utilize to get to that next level. We all have a vision for our business and where we want it to be and how successful we want it to be. Some businesses that might be 5 locations,
Mhm.
and that debt is necessary to get to that next level. So I think it's how we utilize the debt that sometimes can be bad, right? If we go
Yes.
out, you think about, you go out and you get your first credit card and you rack up all the debt, that can be a bad debt. But if we're using it for what it's truly meant to be used for, that's a good return on your investment.
Absolutely. I agree with that. And I I think we can, if it's used strategically, we actually tend to call debt like leverage. That's what we call it. And like if you literally think about the word leverage, it means, using something to give you more power than you would have on your own. And so that is what I see, being able to attain financing is going to give you more power. But that strategic part is extremely important and having a plan to what is the money going to be used for and how much do you need are two really big questions. If a business is coming to a bank, do you guys ask those questions? Like, are you asking what are you using it for? Or is it like what types of questions do you ask businesses as they come in the door?
Yeah. So typically, we want to sit down and have that very honest, open dialogue. We don't want to necessarily put you in something that's going to solve the immediate need, but what's your 5-year goal?
Mm,
When I sit down and I talk with business owners, I ask them those questions of what's working right now, what's not working, and where do you want to be, and how can I help you get there? And so when you kind of break it down a little bit like that, so when you're talking about like your cash flow cycle, that's a big part of it. If there's a breakdown in the cash flow cycle, say with your accounts receivable, that may open up the conversation to lending, right? So it's a it's a holistic approach. It's not just, do you need a line of credit? Do you need a term loan? It's, let's really talk about that cash flow. Let's talk about the day to day and really kind of dive in a little bit deeper, and where do we want to be and how do we get there together?
mm. I appreciate that. I don't know if that's everybody's experience walking into a bank, but I like that you're able to have those conversations with your clients as they come in. And I know I have another client with KeyBank as well, and I had that experience of just sitting down and being like, "Hey, here's what we're doing, and here's our current situation." When in that situation, there was actually a debt restructuring that kind of needed to happen.
Mhm.
So our banker like really helped us figure out like how to kind of split it up and work on and create like kind of a term loan and a line of credit. And it worked out really well. And the business was able to figure out like to pay it off like pretty quickly. But I think seeing your banker as a partner in the process is probably a good mindset to go in with.
Yeah, it's funny. I was recently at a networking event and we were talking about that specific exactly. And somebody said, well, I never really thought of my banker as a part of my team.
Mm,
And I thought, and I was like, you're right. Like, I think a lot of people may not think of us as a part of the team or a part of the business, but we really are in a way. You've got a CFO, you've got your accounting team, you've got your lawyers, you've got all these people around you to help with your business. Your banker's right there with you. So I think kind of thinking about it that way, we're an extension, we're a part of the team too.
yeah, I like that. And if your banker doesn't feel like that, like maybe that's a sign that you might need to change relationships. But
Might
I
not be a
I
good
I
fit.
think there's a lot of people who get into this line of work like you who have, enjoyed the process and they want to actually be helping people and find a bank that will listen to you and actually be a partner. Now, they're not going to be the ones like probably spending as much time with you as your CFO or your CPA or your bookkeeper or anything like that because that's not their role. Like
Yeah.
that's not their role. So that's, you can't expect that type of time, but you should expect some type of relationship, I think, with your
Yeah.
banker. Yeah.
No, yeah, I would agree. And it might not be monthly, it might not be weekly, but at least quarterly, or something like that where you're touching base and, and you feel like they're listening to you. That's important. And it has to be reciprocal.
Mhm. Um if let me see. I think that there's a lot to cover in the world of, I guess, banking products. Some things that people ask about is should we go with the SBA loan or should we go with a traditional bank loan? Do you want to speak to that a little bit and say like why somebody might go SBA versus just coming into the bank?
Yeah, so there's a lot of different, options. SBA loans are acquisition loans. They can be used for a range of purposes. So it's very similar to a traditional loan. You can do the debt refinancing, you can do the working capital, you can do equipment, real estate purchases, buying a business, franchise, and other. There's I think, especially as of recently, sometimes it might be a little bit better option because of rate, or there's a lot of different reasons. It really just depends on the specific business and their needs
Mm,
and kind of what they're looking for. I think it's always good to look into both options and ensure that when you're having a conversation with someone about SBA that you're ensuring that they are an SBA specialist is a big one. I know sometimes people think SBA and there hasn't always been a good reputation, or they might have heard something from somebody about it that may not be the best. So I think it's really important to ensure that you're speaking with an SBA specialist that can really kind of guide you. Um, when you talk about the acquisition piece and buying a loan or buying a business, the SBA can lend to projection based. So
mm,
that's a big difference. So like if you're looking to purchase or start up a business, you can obtain a loan based off of your projections and what you think you will potentially make within that first year.
Mm-hmm.
So like you mentioned, strategic. So you're strategic in your planning and your business plan and putting together your projections and your numbers. So that's a big part of it.
Hmm. Where do people go if they're wanting to explore SBA loans? Do they go to a bank or do they go somewhere else?
You can go to a bank. I know if I work for KeyBank, and I love KeyBank, and we specialize in SBA lending. But you could also check out the SBA US Small Business Administration website,
Mm-hmm.
and do some research into different types of SBA loans. So you've got your 7A loans and your 504 loans. Those are kind of the two most common. And you can look at what those would be used for. And then you could also click find a lender in your area. You can see if there's a lender in your area, and it'll link you right to them. So you'll enter your information and it'll send it over to that SBA specialist, and then they'll reach out to you to talk about it more.
Okay, that's great. And I think it's good to remember that the SBA loans, they typically have very specific reasons that you would apply, like the kind of set of circumstances for one type of loan versus another. So, like
Yep.
you were saying, work with somebody who understands those loans and will guide you to the right product with what you're trying to do.
Yeah, it'll make the process a lot smoother to have
Hmm.
the right specialist or a specific specialist.
Okay. So let's say that somebody has had a conversation and they are like, yes, I would like to apply for a line of credit. And they have maybe worked with somebody to figure out how much that line of credit needs to be. Let's say it's, $150,000, just for an example. Um, when they are ready to apply, what should they have available and ready before they, walk into a bank or before they kind of go and have that conversation?
Some banks might be different. There might be additional documents and stuff like that. So I'll just preface with that. But the basics would be your tax returns, 2 to 3 years of your tax returns. You would want to have your interim financials, so your profit and loss, your balance sheet, year to date. Um, and
How
then
recent do you think that needs to be for some people who maybe are, um, maybe they don't have their financials done every month? How recent do those interim financials need to be?
within a couple months.
Okay.
So if it's, say it's, the beginning of August, you would want to you may not have July prepared already, but you could do January through June.
Okay.
Um, and then, those are really the best place to start, because that's where they can do the financial analysis piece and look at leverage and liquidity and, debt to service. So that's where they would kind of dive a little bit deeper.
Hmm. What is debt to service?
Debt to service is they're going to look at I would kind of break it down, your debt to income,
Mhm.
right? So ensuring that what's your current debt, what's your current income. And then if we were to add, say, that $100,000 line of credit, ensuring that your income can sustain the debt.
Mhm.
So when we do the analysis, that's what we want to look at.
Is that and like I think a lot more people might have gone through potentially like a home purchase than maybe a business line. So they talk about that a lot with like income, even with rent. Sometimes they want to see like how much rent to your income. So that's kind of like how much mortgage to your income. And on the personal side, so that's kind of what you're saying here. That's how much debt does the business have and how much income is coming in, because they know you're not going to be able to sustain it, to sustain payments and to sustain it in the long term if your income is not able to support that.
Yeah.
Um, you probably can't give us any percentages, but could you give us any percentages?
It would just depend on the situation. I would hate
Yeah.
to throw out some numbers.
Okay. Yes.
But I think the important thing to, is that conversation may not always be easy, but when we talk about it, we want to make sure that, you can cover it comfortably and still maintain your business and run your business on a day to day. So,
Right. Yeah. You don't want to get into the situation where you're lending only to the place that the business just has to, it only can make payments. It can't do
yeah,
anything
we
else.
want to be able to do other things in the day to day. Yeah.
Yes, that would be kind of defeating the purpose, I think. That is helpful. So they need to have their financials, they need to have their tax returns. Is there anything else they should be thinking about it when they come into that conversation? What about a question of look like collateral? Do they need to have collateral available for a loan, or is their business the collateral? Tell us a little bit about the word collateral. Maybe you could explain it just so, because again, we're demystifying things and we're trying to talk in plain language here, and we don't want to use too much jargon. And this is an industry where we could have a lot of jargon that kind of goes over everybody's head. So that's why we're kind of breaking down some of these things. Could you tell us what collateral is? And then if somebody was going for a loan, what do they need to be thinking about there?
Well, I think the easiest way to think about it is if we think about it on a personal level, your home. When you get a home loan, when you purchase a home, your home is the collateral.
Mhm.
And so it's based off of that value, right? So we think about it a little bit the same in business. So you have your business and all your business assets. That essentially is a piece of that collateral, and then you as the owner are the guarantor. And we have to have a guarantor on any business loan. Any business owner with 25% or more ownership in the company is a guarantor on that loan.
Mhm.
And so that would entail potentially potentially your personal home, as the guarantor. All of your assets are in there as well. So um, every all of that is kind of listed within the loan documents, and that's all something that you want to make sure that you know up front when you're talking with your banker, and you're putting together that application. You want to ensure that you know everything that's being listed as that collateral.
Mhm. And I think, that scares people away sometimes from actually signing paperwork is that concept of a personal guarantee or the collateral. Um, when you get to that point with someone and they get kind of scared, what do you tell them? Like, what's that conversation like?
Well, I think we have to look at it like the return on investment, kind of. We kind of circle back to that. You have a successful business. If we've done this correctly in the analysis and we've looked over all the numbers, the business can sustain the debt, and get to that next level and that next growth level. So, yes, we have it listed as collateral, but we won't really need it because we're being strategic, we're planning, the business is successful, and this is going to actually take it over here. So we're going to be even more successful for it. So I think those are important conversations to have when there's any hesitancy. Obviously, yes, it is a little scary, but at the same time, um, is it worth it for the growth?
Yes. And it brings it back to, were you being strategic about the amount that you wanted to borrow? Because if you were being unrealistic, maybe, and saying, I need $500,000, but really maybe you only needed 100, then it starts to make that question of, well, did you really need that extra $400,000? Are you willing to put your house up for it? Are you willing to like put everything up to have that extra cash? It might make sense for you to make sure that you've walked through. I mean, it always makes sense for you to walk through the steps of how much do you realistically need, what makes sense for you, and then also what can you afford on the payment side as well. So if we're talking about like a term loan, you have a set payment amount over a set term,
Yeah.
and the banker can help you walk through that and understand what those payments are going to look like before you sign the paperwork. So
Yeah.
you can get a really clear sense of what you can afford and make sure that you're looking at that strategically with a long-term view. And if you have somebody in your corner, like, an accountant or a CFO or something like that, they can also help you feel more comfortable about those financial projections as well. So, and
Bring
then
your
obviously,
team. Yeah. You bring your team to the table and have that conversation.
yeah. And then that'll get a lot more comfort around that feeling of like, okay, what does a guarantee really look like? And hopefully we never need to have to use it.
Yeah.
So, um, well, what other things do you think people need to know? I know we're kind of coming up on our time here, but other things would people need to know about potentially walking into their bank and getting a loan or getting some kind of financing?
Um, I think the biggest thing is like we talked about, just in asking the questions,
Mm.
right? Being curious. You don't know what you don't know. And so I think when we kind of hesitate because we're not sure what's out there, what's available. And so I think going in and having that conversation with a banker and having building a relationship with them and having that genuine conversation of, this is the day to day, this is what we do, and this is where I want to be. How can you help me? And that's okay. We want to be a part of that team, and we want to have those conversations, and we want to see you succeed, and we want to see the business grow and to its full potential. So I think just kind of shaking that thought of don't be afraid to ask. You started your business with a passion for that industry, and you're doing it and doing it well. We do the banking, we do the things on our side, and so we're here to help.
Yeah. Yeah, that's good. Uh, in our intro for you, you mentioned that you're a part of Key for Women. Can you
Yeah.
tell us a little bit about that too? Because I've heard about the program and I've kind of met some people, but I would love to tell the audience more about that program.
Yeah. Key for Women is our national based program that we put into place for women business leaders in the community, women business owners, even our male allies. And we support the financial progress and empowerment of business women. We want to really bring everybody together to connect and advocate for each other and empower each other. I had a couple different events we've done, locally. We've got um, quarterly webinars that we do, which are kind of like an educational webinar. It's always really good to hear from other people about their journey, because they might be in a different spot in the journey where you're trying to go or where you've already been. So we're all at different parts of that journey, and it's always nice to hear from somebody else that they've been there and they've succeeded and they're on the other side. And so we really just want to bring everybody together, and open the door for everybody to kind of connect and empower and advocate for each other.
Mm, that's amazing. I think that women supporting women is imperative. We need to, and especially in business, I think that, uh, there's so much power that can happen when we advocate for each other and when we lift each other up and when we just know about each other too, because, when we make those connections, we can, make introductions and we can, work on growing each other's businesses together. So I love that a bank that doesn't have to do that is creating a community of women. So I am, yeah, very, very cool. I'm excited for that. If anybody wants to find out more about the Key for Women program, where can they go?
On our website, you can look up KeyBank and look for Key for Women. And there's some
And it's Key,
information
the
in
number
there.
4, right? Key
Yep,
for women. Okay.
Key for. Yep, use the number women. You can look in there. You can pull up previous webinars. You can watch the recorded webinars and see kind of what those are all about. And then you can sign up to be a member. And then, look around for a KeyBank, maybe ask someone if you do join, ask them if there's any events locally that are happening. We do some events locally kind of all over the country, and all of our footprint. So it's a great way to connect.
Great. Awesome. Well, Max, anything else that you feel like we need to talk about before we wrap up today? I feel
I
like we've
just want to
covered
say
some.
thank you. Yeah, we kind of covered a lot. Just
Yeah,
thank you so much for having me. This was so nice, and I hope everybody gets some great value out of it.
I think so. And that real key takeaway is just that I think is just to go in with curiosity and to be open and to try to find a partner in your business growth journey. And having a great banking partner can make a huge difference. So, well, Max, thank you so much. I have one last question. And I didn't tell you about this before. So uh, I was curious if you have any mentors that you've had along your career journey. And if so, if you can think about any of the best advice that they've given to you.
I've had quite a few over my career. I would say the best advice I was given was to be myself and to be authentic. And I think that's because we tend to see someone else succeeding and doing something really, really well. And we try to mirror that and we lose a little bit of our own identity. And instead of doing it how we would do it, we can still be that successful while being ourselves. I think that was kind of the best piece of advice I have gotten over the years, um, from a very important mentor in my life. So, yeah,
Awesome. I love that. Thank you so much for sharing. All right. Well, thank you, Max. Thank you for being here today.
of course. Thank you. Have a great afternoon.
You too. Bye. Thanks for listening to the Financial Clarity Podcast. Be sure to check out the show notes to learn more about today's episode and click subscribe on your favorite podcast app.